Well, greetings and salutations, test takers. This is Series 7 Guru coming to you from my studio in an undisclosed off-grid location. We have an explication request, kind of different today. Somebody asked me to explicate this question doing the method that I use, which is the T tracking money in and out. And then they asked me to also show it to you using the method that Ken Finnen uses, Mark Esposito does. More than happy to do so. Might save you 30 bucks. So here we go. An investor with no other position sells for DWQ June 45 calls at 4. The calls are exercised when the stock is trading at 47 and a quarter. What is the investor's profit or loss? So we fire up the T, we track the money in and out. So when we sell those calls, that's going to be money in. I recommend we do things on a per share basis. I also recommend that before you do anything, you're good at contract specifications, that this is an obligation to sell 400 shares of DWQ at any time between now and June at $45 a share. For that, we took 4 points, right? We're a potential victim. If you get contract specifications, you can track money in pretty good shape. All right, so it says the calls are exercised. So if I'm short those calls and I get exercised, that means I'm delivering the stock at 45. I don't have the stock here. It says no other position. So this is really foolish. It ends up working out, but it's a naked call, right? So I buy the stock at 47 and a quarter. I deliver at 45. I take a 2 and a quarter hit there, but that's still okay because I've got more money in than out. At the end of the day, it ends up, I've made a 0.75 on 4 contracts, each governing 100 shares. So the answer is I have a $700 profit. So that's the answer to the question. So now let's look at the Ken Finnen, Mark Esposito way to look at it. There you would memorize the break-evens using your matrix. I'll show you my matrix, but whatever the matrix is, you get the break-even 49. You say, okay, well, I'm a bear. So I know that anything below 49, I'm going to be a winner. Then I plug in my strike price because nothing happens at 45. The way I say this is there's a floor at 45. 45 or lower, contracts expire, so the max gain here is $400. Then you plug in the price, and the price is 47 and a quarter, and you know that that's 1 3/4 in the right direction, and that's how you would answer using Esposito or Ken's method. That still fits on the matrix, right? Right direction, you're just comparing it. So here's how that looks on the matrix. There's our strike price. There's our break even, 45, 49, right? And then we just have losses above that. And we have a gain in between there. So I think of that as a floor. There is no ceiling, and that's why this is foolish. For limited reward, you are taking unlimited risk. I hope you found that helpful. Remember, inch by inch. Your exam is a cinch, yard by yard. Your exam is hard. And I will see you for the next explication request.